Matt Bennett and Joe Vaclavik rejoining us. Matt, coming up this next week, we have Kansas wheat that will go on the wheat tour, get an idea of how good or how poor conditions are. But you look at some of these adjustments USDA made to wheat. I mean, talk about drought impacting. Despite the increase in seedings, we saw USDA really not change much when it comes to the new crop balance sheets.
Yeah, it's a little bit surprising. I mean, certainly I'm out in that part of the world as I'm talking to you here, and definitely major issues. Nebraska, Kansas. There's definitely going to be some problems, in my opinion, whenever it comes to production. You talk to growers that say, they haven't had a rain in 3 years, which is kind of an exaggeration. But again, to be honest, it really isn't. I mean, it's just a pretty tough sailing. So I guess from my vantage point, they're maybe a little bit rich in their assumptions on what the wheat crop might look like. In fact, I do think there could be a little more abandonment than what they're suggesting. So I think moving forward, this wheat crop tour is going to be very interesting. It'll be one of those years. Some years, I guess, people don't pay very close attention. I think this is one of them we should be watching maybe a little bit closer.
We're also watching that deadline for the Black Sea grain deal, and we know that can be a market mover. But Joe, right now, what are some things that you're watching heading into this next week as those negotiations continue to take place?
Real quick, I'll mention the HRW wheat estimate for HRW specifically. The crop estimate was like 75 million bushels below the average trade guess. That was actually one of the bigger surprises in the report. I know it shouldn't be a shock that the wheat crop in Kansas is no good, but it's all about expectations versus reality, of course. Going home for the weekend, there was not really any fresh news about the grain deal. They're still talking. Russia says that they're not happy with what's been presented to them. I would imagine coming into next week, you'll see some news come Sunday or Monday. Is it good news or bad news? I don't know. I just don't know if the Black Sea grain deal is the make-all, be-all that it used to be. It used to really move markets, those headlines. Now it just seems like it doesn't.
Well, speaking of demand, let's get into the cattle market, because where you are, I know you're out at Kansas State for your son Bo's graduation. Congratulations to him. But in those areas, you look at pasture and range conditions, they are not great. So question mark, will we see more cow culling? But at the same time, are we seeing some demand impacts just from prices and inflation? What is the battle right now in the cattle markets, though, Matt?
Yeah, I feel like overall you've had a very wary investor. I've actually talked with Joe on his show a couple times about this. Whereas on some days, whenever the corn market's really struggling here lately, which has been more days than not, some of the cattle buyers, I guess, as far as the board's concerned, haven't been as excited as what we thought they might be. And so, you're entering into a time when demand's going to be awfully strong. Grilling season's certainly coming. We know that cattle numbers are going to continue to dwindle. But whenever I look at, are we going to see a lot of cow culling? I think that you're still going to see some folks are healing up. I was in Nebraska yesterday, and parts of the Nebraska are finally getting some rain that have really needed it. Obviously, super excited about that for those folks. But there's still just way too many people that aren't getting the rain. So overall, fundamentally, this market is the best looking ag market, in my opinion, that we have. But you're still going to need the equities to hold together. You're still going to need consumer confidence to hold together. And if you get those things to happen, I think even brighter days are ahead for this cattle market.
Joe, real quick, do you agree with that?
Yeah, cattle market, live cattle, feeder cattle, probably the strongest commodities, bar none, that I track. I mean, you look at the other sectors, grains, energies, precious metals have been okay, but the cattle market has really been able to kind of buck the trend of lower commodity prices. If you look at any of the commodity indexes, you look at the Bloomberg index, you look at the Goldman index, they've been trending lower and lower and lower for a year now. And the cattle market's been able to impressively buck that trend. The fundamentals are absolutely there. My fear would be something in the outside markets. We had some issues in cattle when the banks were blowing up. We've had some issues when there's like recession risks pop up again. So there's still that outside risk that money doesn't want to be associated with long commodity positions. But the fundamental story is great.
All right. Well, happy Mother's Day to Manisa. Happy Mother's Day to Tiffany. Thank you both for being on. We need to take a quick break, and then we'll have much more right here on U.S. Farm Report.
Chinese cancellations again.